To explain this concept, we'd use the Binance platform. If you don't have an account on Binance, there are links in the description that would direct you to a page where you'll be able to seamlessly create an account on this platform. Okay, so to explain the concept of trailing stop or trailing stop orders would come down to the base of this app, the Binance mobile app. Okay, you would see where it says features, so you click on that. So that would bring you here immediately. I've got a video, a very detailed video that will show you how to trade on this Binance features platform. Okay, so I'm not going to be explaining most of these things here. Okay, first, what is a trailing stop order? A trailing stop order is a kind of order that follows the price of the market, preventing you from making a loss when the price tries to make a correction. So this definition might not really make sense now, but as we progress it would make sense, because I'm going to show live demonstrations to explain this. Okay, so when do you use a trailing stop? So let's say you bought Bitcoin, you went long on Bitcoin, right? You would need to create a sell order to prevent a loss. If you shorted Bitcoin, you would need to create a buy order with a trailing stop to prevent you from making a loss. So basically what a trailing stop does is it prevents you from making a loss. Okay, so let's consider the first situation. Let's say you bought Bitcoin at a certain price and you want to use the trailing stop order to prevent making a loss. Okay, so you would come over here to create a sell order, right? So let's click on that now. So we want to create a sell order, right? Before I make a live demonstration of this, let's explain a few things. So right here you can see that we've got this trailing stop. By the way, if you don't know how to get this trailing stop to be here, you're going to click on this simple little icon there. You're going to see all of these things displaying here. So you come down here, so you see where it says trailing stop. You click on that. If you look very closely, you see we've got a few things here that need to be explained. A callback rate is the rate that defines the sell price. Because you're trying to make a sell, the callback rate defines the sell price. What is an activation price? An activation price is the price that triggers the callback rate. Okay, now if you look here, you can see that the price of Bitcoin is at 19,000. If you select an activation price of 20,000 here with a callback rate of 2%, this means that your trailing stop order is going to be executed at 19,600. How did I get that? I'm going to show you how to calculate it in a moment. If you also decide to put an activation price of 21,000 with a callback rate of 2%, that means that your trailing stop order is going to be executed at 20,580. And if you decide to put an activation price of 22,000, your trailing stop order is going to be executed at 21,560. That is if you're still maintaining this 2%. How do you calculate this? So how we do this is you select your activation price. So let's say we have an activation price of 20,000. Then you would subtract 2%, because 2% is your callback rate. So 2% times your price, right? Your activation price, 20,000. So this is basically how we do this. You see, 20,000 is your activation price minus 2% of your activation price, which is 20,000. And of course, this thing right here means 20,000 minus 2%. 2% is like 0.02 times 20,000. Okay, so and this is like saying 20,000 minus 400. So this would give you 19,600. So this right here represents the price at which your order is going to be executed. So this is how you actually do the calculation. So with any activation price and a callback rate. Okay, this is how you would do the calculation to get the price at which your order is going to be executed. So let's actually explain this a little bit further to understand what this means. The price of Bitcoin is at 19,000. The moment the price of Bitcoin gets to 20,000, this activation price would activate the callback rate. Okay, what this means is that if the price of Bitcoin decides to pull back a little bit, that is, if it decides to drop a little bit, the callback rate would be waiting for it, okay, to catch it at exactly 19,600, as I showed you earlier. So if the price drops to 19,600, your order would be completely executed. That's how this works, okay, if you are trying to take profit using the sell order after having bought your asset. So the trailing stop never goes down, it only follows the price of the asset. So if the price of Bitcoin moves from 20,000 to 21,000, like I said earlier on, your trailing stop is going to follow that price, and your new trailing stop order price would be at 20,580, as I illustrated earlier on. Okay, so that's basically how this works. Okay, now it's also very important that your activation price has to be either the price of the market or any price above the market. Okay, so if I decide to put a price below the current market price, the current market price is at 19,000. If I put like 18,000, notice that the sell button is no longer active because I have hidden a price below the current market price. Okay, so there are two conditions for the trailing stop order to be filled. One, there must be an activation price. The activation price has to be reached, and the second is that the callback rate price has to be reached. Okay, I already showed you how to calculate this. Okay, the percentage you put in here defines the price at which this order is going to be executed. Is very important. So before you actually take a live trade, make sure you've experimented with this and you are okay with the price you're looking at, okay, to avoid making excessive losses. So let's do a live demo of this. So I'm gonna buy Bitcoin now. So to buy Bitcoin, I'm gonna use a market order. Okay, so I'm gonna buy Bitcoin, use a market order. So what quantity of Bitcoin do I want to buy? I'm gonna buy, let's say, $50 worth of Bitcoin, and using a 50x leverage. Okay, make sure you watch that video on futures trading so you understand what I'm doing. And then click on the buy button, right? So I'm using the market price, so buy at the market price, and click on the buy button and confirm this trade. So you can see, say success, my order has been executed. Now I want to set a trailing stop order, so I'm gonna click on sell. So what I want to do now is I want to tell Binance, hey Binance, I have bought Bitcoin, but I know the crypto market is very volatile, so I want to set a trailing stop order. So you can see I just selected that. So what I want to tell Binance is I want to select 2%. So I'm telling Binance I'm selecting 2%. So I'm saying, hey, I want to select an activation price of 20,000. So I put 20,000 in here. So now, like I explained earlier on, I'm telling Binance that I'm selecting a callback rate of 2%, and I want this callback rate to be activated the moment a market price hits 20,000. So I'm saying if the price of Bitcoin gets to 20,000, I would want to take my profit if the price goes down by 2%. And 2%, like I calculated earlier on, is 19,600. So I am telling Binance to sell my position. That means sell how much? Sell 50 sell the 50 Bitcoin I bought earlier on. Okay, so I'm gonna click on sell. So you can see here, I'm gonna click on the confirm button. As you can see now, we've got a success. So if you look very closely here, you can see I have an open order. You can see it has an activation price of 20,000, a callback rate of 2%. Okay, so that's basically how this works. In the beginning of this video, I talked about the fact that if you shorted Bitcoin, you could set a buy order with a trailing stop to prevent losses. Okay, so let's actually do this. So let's say we want to sell $50 worth of Bitcoin. So we'll click on the sell button down here and click on the confirm button. Now we've shorted Bitcoin. What we can do is to set a buy order. Okay, so we can go here and click on the buy button, and then we'll come over here and change the market order now to a trailing stop. Since I shorted my Bitcoin at 19,000, so I would expect the price to go down. If it doesn't go down, I would make a profit. So my activation price has to be either the current market price or below. If I put anything above 19,000, the buy button wouldn't be active. So let's say we put 20,000. You see, 20,000 makes this button not to be active, because if you are setting a buy order now with a trailing stop, that means you already shorted. You want to take your profits with a buy order, right? So that means the price has to be lower, right? Either the current market price or lower. So if the price of Bitcoin starts falling down to 18,000 and suddenly decides to go up, this 2% trailing stop would execute the moment the price goes up to what this 2% means. So you would also put the quantity of Bitcoin you want to sell. You would put that here. So let's click on the buy button. So click on confirm. So you can see here now that I've got an open order, and it says I've got an activation price of 18,000 down here and a callback rate of 2%. So what this means is that if the price of Bitcoin starts going up, if it gets to this 2% rate here, my order is going to be executed.